Trading is a lonely game, so grab a coffee and let's change that. Roll the intro. Don't adjust your radio set, you're right on time. Coming to you from 5 cities, Hot 44 FM, your premier trading show, the Bullish Café. Ladies and gentlemen, hello and welcome to the Bullish Café. And thank you for stopping by. It is gonna be alright today. Continuing our story, we're heading into the week of February 16th. Preparations, anticipations, insights, trades. We jump right into it. Starting with the weekly news calendar. Here it is. Definitely a lot going on. We have a lot of chances to find opportunities all across the board. There is a United States bank holiday on Monday, yes, but the market is still open. It's not like there's much to do either, but we'll see. British pound and New Zealand dollar news on Tuesday. Claimant count change for England is equivalent to unemployment claims for the United States. Just so you know, we will probably find it somewhere here. Yes, here it is. And more major news events for Euro, Dollar, British Pound, NZD for the rest of the week. Good volume anticipated. And on to the charts now. Starting with the dollar index weekly chart. Trying to build some references always. And let's see what we have. This is the weekly chart. We're going into the week of February the 16th. And oh boy, sometimes it's not very easy to read. And you have to deal with that. Get an understanding of the current market using the concepts we consistently use. Measure your probabilities and then decide to look further or to look away. You always have the choice. Alright, I will show you where the complication lays for this weekly outlook. Now, no matter how you read it, no matter what your trading style and philosophy is, you will always circle back to premium and discount, respect and disrespect. Here are the fundamentals. Price moves from premium to discount and vice versa. At the same time, it respects one and disrespects the other. In order for price to maintain a direction, if it's bullish for example, price will respect discount arrays and disrespect premium arrays, and at the same time create new discount arrays, and so on. That is until price starts respecting both and disrespecting both. That weird confusing state is the consolidation, and the only step is to wait for a refresh, respect one and disrespect the other once again. That is really what it all comes down to, alright? No matter what trading language you speak. So let's go back here and apply this mentality. These elements were outlined in previous episode. I leave them as they are, as long as they're still relevant for continuation. So here, price made a strong weekly sweep on the sell side liquidity here, so a major discount respected. At the same time, creating these premium arrays in the weekly bearish fair value gap and the overlapping part in the bearish fair value areas. And previously, following a correctly anticipated bullish bias, price did move higher and tagged into the fair value gap as premium array. Now, how did price react to the fair value gap? Is it a respect or a disrespect? Did price close inside or outside the fair value gap, or better yet, the premium portion of the fair value gap? Well, price closed inside. Remember the sideboard from episode 2? As we studied, this is a disrespect candle to the fair value gap. So, discount respected, premium currently disrespected, Weekly bearish fair value gap disrespected by previous weekly candle closing inside, making this previous weekly high, the disrespect high, the next draw on liquidity that price should target. Now you could argue that previous week closed bearish. You see this down close here? Terrible for your plan, right? Well, not much. I just see it as filler for the most part. Nothing more than a retracement lower. And if you took a loss during that, it's completely fine. You don't expect to have a 100% win rate, do you? Well, you better not, alright? If you get it up to a 60%, you're a champion. And I'll leave it at that for now. I'll touch on that subject very soon. Anyways, the relevant context here was clear from the start. Discount respected, bullish rejection from it, bullish continuation higher to the fair value gap, then disrespecting the fair value gap. Now the quick game of probabilities, alright? Essential for your bias. What is the scenario highest likely to happen? Is it scenario 1, discount respect, bullish continuation after this price leg here, disrespecting premium, retracement lower to internal discount to reach the new premium created by disrespect high? Or scenario number 2, premium disrespected, yet it will still generate a reversal without taking a premium with respect, then go all the way down here. Let's be real, the most probable option is this one, scenario number 1. So bias, bullish, from the nearest valid discount array that shows up on lower time frame to this premium in this disrespect high, and that is it. That's all you can get from here. We take the bullish weekly bias on DXY and see if it's nicely mirrored to bearish on counterparts. Let's take a look at the pound dollar. Here it is. This is the weekly chart on the pound dollar, and let's see. We're going to mirror dollar index bullish bias to bearish here, and let's see if we can back it up. And just like DXY, price made a strong sweep on this old high, major buy-side liquidity taken, premium array respected. Next, after respecting premium, price turned lower towards discount, of course concentrated into this weekly bullish fair value gap here. As we outlined in previous episodes, price closed inside it in a disrespect weekly candle, leaving this disrespect low as nearest discount to target. So, premium respected, discount disrespected, new discount created as target. We don't anticipate price to go all the way up here just to go down. You would be wrong. And this previous weekly candle confirms it. Price is unable to push higher from here. It won't do it. This is your new discount to target. So bearish bias. Now your context. Which premium array is high likely for price to move lower from? Simply, your context premium doesn't exist here. It's time to switch to daily now to find the context premium where we should anticipate ourselves. Then the narrative of what we would like to see in order to engage. Alright, daily now. Here is the daily chart, and it does clear up more why we would be inclined to bearish more than bullish. It's the current market structure. This bearish price leg we outlined on weekly, here it is. Premium is here. Price took all its time during previous week to do this important move right here. Reach up to the premium of the price leg, create a swing high here. Internal buy-side liquidity generated as your new premium array, followed by a big sweep and respecting premium. And guess what? Disrespecting this discount here, daily bullish fair value gap. You see, it's always a respect and disrespect game. The same concept we used just a moment ago on weekly dollar. So yes, premium respected, discount disrespected. Bearish you are. And I'll give you one more cool reason for that. Alright, let's look at these two swing highs right here. This one and this one. You see it? High, lower high, high, lower high. Very clear. Let's join them together with a line. Now, let's take a quick peek on the same two swing highs, Wednesday the 4th and this recent weekly high, but in EURUSD, and I'll explain it to you. Here are the same two daily highs, but here it's a high and higher high. Here they are side by side. So, pound dollar, high, lower high, euro dollar, high, higher high. This is what we call an SMT. You know what's gonna happen now. Oh yeah. The sideboard. Roll it. Education. Alright, welcome back. SMT. Smart money technique or smart money tool, depending on where you learned. Either way, same concept. Let's break it down. You take two correlated pairs that are supposed to move together, which there are a lot of them. You got the classic euro dollar and pound dollar, both dollar pairs, both eurozone adjacent, or the trio of Nasdaq, S&P 500 and Dow Jones, or inversely correlated pairs, just how the pound dollar mirrors the dollar index inversely. It's like they rhyme, alright? On a normal day, if one prints a higher high, the other one should too. The SMT is when they don't. Instead of a symmetry, there's a divergence. One prints a higher high, the other prints a lower high. They diverge. And that divergence, you can see it as a cracking correlation. And it is purely institutional. It's a hint, an important one even, that the market structure is high likely about to shift. It's a sign of potential change. And its value is mostly observational, let's be real. It's only one of the many arguments that you should prepare. And why is it purely institutional? Take it like this. A higher high is basically a liquidity sweep. A swing high, buy-side liquidity, swept with a higher high. It normally signals that high likely a reversal is coming next, right? Euro dollar and pound dollar, same buy-side liquidity. On euro dollar, we do have a sweep on it, printing a higher high. On pound, price failed to replicate and closes with a lower high. The liquidity quota needed by the institutions has already been fulfilled by the euro operation, and there is no need for the pound to sweep the liquidity it has, and it just crashes down directly. So logically, since one is reversing, the other is reversing too, by default. So which one to choose for looking further into an entry? It's the pound dollar, the one with the lower high, the one that failed to do the sweep, simply because it's being met with a higher resistance from premiums, making it way easier and more efficient to go lower. Back to our charts now to see it. Euro dollar higher high, pound dollar lower high. So we're positioned at the correct choice by looking into the pound dollar. Using all of these concepts, higher time frame premium respected, discount disrespected, SMT with euro dollar and DXY, we are more confident in the potential bearish bias this week. The next step is our context. From premium to discount, discount is clear. It's this nearest swing low. Right here, that is where price should draw to. But premium is not clear here. We need to switch to lower time frame. And you already know the drill. Your usual midnight open, valid premium array. Above it, wait for the reversal model as your narrative that would lead you to catch a sell. And this is our time for today. Stay tuned to the next episode where I show you the weekly results of this exact reading. Until then, take it easy. It is just another day at the charts. The Bullish Café signs off. Enrico, take the mic and play something. And your cortisol, I say, keep it in control, baby. This is Hot 44, Vice City's hottest records, and a trading show for some reason.
Streets half asleep, but our feet still talk. You lean on my shoulder as the taxis crawl past us. Warm breeze on my face, your hand in my coat. You laugh at my stories like you already know the end. Every little step feels like a scene I've seen. You look up and say, baby, don't wake me if this is a dream. After midnight